All right, now turning back to the major averages. Joining us now is Rebecca Walser, president at Walser Wealth Management. And Rebecca, stocks closing higher on the first trading day of the year. So what are your thoughts?
I think it's good optimism, Ken. I think it's good that we have a good start to 2022. It's what we all needed. We needed a refresher to kind of just have a day to just have some peace and a great start to the new year. Obviously, Ken, we have a lot of headwinds that we are facing between inflation and tapering and 3 interest rate hikes and China's economy falling apart, which we now see coming into full spectrum. So there's a lot of headwinds between inflation, supply chain problems, but it's great to have a day where we just start and celebrate the new year right and going in the positive direction. This is always a good sign for the whole year.
And we're going to talk about those issues in a moment, but Apple hitting 3,300,000 Teslas delivered. Did you expect this? Was this a surprise, or did you see this coming?
No, I mean, Apple up 38% for the year of 2021. And of course, remember, we had a stock split not too long ago with Apple as well. So that is phenomenal. I think Apple, to Krista's point earlier on Apple's supply chain, Tim Cook, he started the same time Steve Jobs returned in 1998. He became the COO in 2005. And she is absolutely right. He built a incredibly, I would describe it as a just-in-time inventory loathing supply chain, because he says that, inventory is evil in the words of Tim Cook. And that lets us know that, yes. But, the problem, Ken, is if you put all of your eggs in the basket of China. And so basically, for the viewers out there, Apple basically sources materials all over from a supplier list that they have meticulously culminated over the years. And then they assemble it in low-cost, low-wage factories in China, and then they ship it either direct to consumers through direct buying or through retail. And so it's a very seamless supply chain, and they did very well to keep at bay the shortages of chips, because let's face it, they are the largest buyer of chips potentially in phones in the world besides Samsung. And so they have a lot of clout that they can push on their suppliers to keep giving them the chips. But they did have some problems in the fourth quarter with Texas Instruments and some other suppliers, which did make them reduce the iPhone 13 sales by 10 million. So they're not escaping completely, but I think they did phenomenally well, and I think the stock price is rewarding them for that.
Now, you mentioned the Fed, you mentioned, the rate hikes, you mentioned tapering. Inflation seems to be still hanging around. Do you think all these actions from the Fed is too little too late, or do you think that they're on par to getting where we need to be?
Yeah, I wish I could say it was not a little too late. But I think, when Jerome Powell picked last year, Ken, the word transitory to describe the inflation problem, I think that was very premature. I don't think that we really knew at the time he started using that word that it was going to be transitory, especially when you haven't had a global pandemic in 100 years, and certainly not a global pandemic where the world responded by printing $25 trillion of currency, including the United States. So, to use that phrase so early on before really having the time for the data to settle, it was premature, and he had to backpedal from that. So I think he did a good job of really backtracking and saying, okay, this is not necessarily transitory. We do need to probably pull back and taper, and we do potentially need to look at rate hikes. But the market reacted, if you remember, Ken, in the last quarter, the market reacted very favorably to tapering and very favorably to rate hikes, because we were told it wasn't going to happen until the spring. So I think the closer we get to the actual taper, the market will start to get upset when it's not going to know that the free candy is not going to keep coming every single day. So I hope that he is able to navigate this pullback very tactfully, because we can see a taper tantrum, and that's exactly what we want to avoid.
Now, you mentioned China just a bit earlier. A lot of U.S. companies have their tentacles there. Do you think volatility in China and their continuing crackdown on tech and other sectors will impact U.S. markets this year?
Ken, I don't see how we can escape it. I mean, one thing that we've done is we've made a deal with China, and our two industries, our two economies are inextricably linked at this point. We rely on them so much, which is why you can see our food shelves being, short or empty in some places because of the supply constraints that we've had, supply chain constraints, logistics being delivered, trucking, unloading these ships in the port outside of California. We've seen those ships out there. So you can see how inextricably linked. China's economy is with the U.S. economy. And if people don't realize that, I don't see how else we're going to see how, it's so clear. So as China goes through this economic situation that they're going through, and people need to understand that China has just been building, and artificially inflating their GDP for probably the last 15 years. And now there's a property reckoning coming. I wouldn't say it's the same as what we experienced in 2008 and 2009 with the global financial crisis in America, the Great Recession as we call it here, but certainly China is not going to escape this, and I think that we will have a contagion impact on the U.S. markets, and we should be expecting it and prepared for it.
It's pretty broad, but how do you expect markets to move this year during Fed actions, the midterm elections, and the COVID-19 timeline?
All negative things for the market, Ken. Nothing there was positive. No. So obviously, all of those things that you just listed are all negative market movers, could be reversions back to a mean. And the other thing we have to look at is, do we have the underlying economic fundamentals? And I think it's very clear with 10 million job openings, with super high inflation, with the Federal Reserve still right now not tapering, buying $120 billion of mortgage-backed securities and treasuries a month. When that free money goes away, the market is going to feel a little bit of withdrawal, and we need to expect it and we need to prepare for it.
What are some bright spots that you see on the horizon?
I definitely see, I think airlines have done a tremendous job. I know it was just mentioned in the segment before me. Airlines have done a tremendous job in the face of adversity of still, making it happen and not really seeing a lot of losses. So I will really be interested to see if we get, even with the cancellations we had this past weekend over a holiday weekend, the airlines are still picking up and still people are starting to return. I think as we see that Omicron, this new variant, is maybe a lot more contagious, but a lot less lethal, and certainly not something that you're going to have to go to the hospital for, as we can see that as continue to trend. I think people will feel more comfortable going out, making summer plans, making travel plans, engaging in the economy, going to restaurants, going to drinks, and that's what we need. We need this economy, which is 70% consumer spending focused. We need people to feel comfortable spending money so that they go out and do that. If people are still remaining locked up in their homes, we're going to see additional economic struggles, and that's exactly what we don't need.
All right, Rebecca Walser, president at Walser Wealth Manager. Rebecca, it's always a pleasure. Thank you so much for spending the evening with us. Now, coming up, Senator